Hello, welcome back to Diamond's Edge. My name is Greg Diamond, editor of 10 Stock Trader at Stansberry Research. And this week we're going to look at interest rates with the CPI coming out, PPI coming out, obviously important gauges of inflation, which is going to lead to what the Federal Reserve may or may not do. And then in turn, how that reflects what the stock market will do. Okay, we're going to look at how we've seen overbought levels work off within a strong uptrend. We have seen some volatility, but I'm going to compare the two between interest rates and stocks and kind of show you what I'm looking at over the next few weeks. Okay, so let's jump into it. This is a chart of the U.S. 10-year interest rate. And first I want to point out, kind of the short-term time factors that I've been discussing really since the start of the year. And you can see here, this February 14th actually marked a high, and then we dropped down, and then March 8th, which is where we traded advanced micro devices, this marked a low in interest rates, and we saw this pop up. Now, not all stocks are reacting similarly to interest rates rising. And as I'll show you next, stocks have actually worked off overbought conditions despite the fact that interest rates are rising. Okay, so let's see what we have here now. And this is a chart that I put together for subscribers over the last 2 weeks or so. And basically what I'm doing is I'm looking forward to what's next. And I have the next set of time factors here really all the way out into May. But you can see here over the next few days with CPI and PPI coming into play, how are interest rates going to react? Now, I'm not going to sit here and tell you that inflation is going to be higher or lower. What it really comes down to is, are we going to see a big outlier either way? If it continues to come in around estimates, that's probably not going to be that big of a deal. And my guess is that, investors in the stock market will probably look at it and say, you know what, it's really not that bad, which would be probably most likely be a buying opportunity. Okay. But even if we do get some spikes up here, I want to show you what's a symmetrical move that is possible. Okay, so we can measure this move here and then add it to here. So again, we could pop up a little bit higher interest rates. You can see this resistance line is here, and then we have the symmetrical move. So we could see something like this happen where we get a high this week in interest rates and then we start to trade lower. Well, guess what? That's probably going to tell you that stocks are actually a buy here. All right, and then down low on the bottom here, look how the composite index, the lower level right here, is actually starting to make a lower high, and even though the RSI is rallying into overbought levels. Okay, so basically my point here is let's say interest rates, we get one more pop, whether it's CPI or PPI or another inflation data point, perhaps Fed speak, who knows? Okay, the point is that, if we get a rally into resistance levels, then we look to the indicators to tell us, hey, you know what, this is probably a little bit overbought here, and then we trade lower. All right, so that's what I'm looking at in terms of interest rates. Now let's compare this to what's happening in stocks. Okay, I'm just going to keep this very simple with the S&P 500. All right, and the first thing, again, I mentioned it at the start, is the overbought conditions. Okay, I was pointing out all this divergence that we had, but stocks never really broke. All they really did was they traded within support. Yeah, we saw, again, around that February 14th date, February 12th, 13th, we saw a huge volatility. We saw another drop. Here was March 8th, where, a stock like AMD or NVIDIA, some of the other high-flying tech stocks, actually traded much lower, but the S&P 500 took it in stride and kept rallying. Okay, but look what it did. It went from working off overbought levels to actually coming into, and what I mean by overbought levels, obviously we have this divergence here on the RSI where, this starts sloping lower while price is actually still rallying. Okay, so the normal technical divergence you see, you have a lot more volatility. We didn't see it. Okay, so let's focus on what's next. Now what we actually have is we've actually flipped from, looking for negative divergence here to positive reversals on both the RSI and the composite index, to where we can have a situation you can see here in the black where, you know, we could actually rally. Okay. So, and again, you know, whether or not this happens to start this week or, you know, later into this week, this is something that I'll be looking for in terms of buying opportunities in the stock market, at least on a very short-term basis as we move into the later part of April, possibly into early May. So that's what I'm tracking this week with inflation numbers coming out. I think it's going to be important. If we don't see any big, you know, surprises, if you will, in terms of, you know, what the estimates are versus what the actual numbers are, this could be a setup where we look to buy. All right. Thank you very much, and we'll see you next week.